Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll give you my view on the macro outlook for Russia and the world in the coming week. The past week has been quite positive for global markets. The two major factors that boosted performance were one, the results of US elections, particularly the fact that the Congress is likely to remain divided, which means that the new president, it is likely that Biden will be the president, would be very much limited in his ability to push through with more radical economic reforms. Such reforms that Biden wanted to implement actually include increased taxation on businesses and wealthy Americans, which for the markets has been a risk factor because any tax increase could lead to subdued economic growth, and given the current situation, that could actually increase pressure on the US economy. The fact that this is becoming less likely is certainly a positive driver for the markets. And the second factor was were the news about the successful testing of new vaccine against COVID-19 coming from Pfizer. This news boosted optimism on the markets that the vaccination and perhaps the end to pandemic could be closer than many think. However, by mid last week, these factors have started to play less of a role, particularly when it became clear that vaccination would take quite a bit of time, production of vaccine, transportation, which is quite difficult, and we're talking about months rather than weeks, while the current economic situation remains quite difficult because of the spread of the coronavirus. The market started to correct second half of next week, but on Friday night, US markets bounced again up. And today, on Monday, we're seeing a similar positive trend on Asian markets. However, I remain cautious about the further trend on the global markets because basically I think that chances are that the markets are likely to take a pause very soon because the effect of these factors is starting to become less and less significant, while the COVID reality and the economic reality is still very negative. We have seen a significant spread of the virus in many economies, including major economies, which means that because of the importance of the fourth quarter for many developed nations, it's a Christmas period. Normally, it's a high spending period. Significant rise traditionally in consumer demand, but because of the current situation, the annualized figures could show another slump after relatively positive dynamic in the third quarter. The major factors that would drive performance on global markets, including the Russian market and the ruble in the coming week and perhaps weeks, are three. One is the dynamic of the pandemic, which, as I said, does not give a lot of grounds for optimism, unfortunately. Second one is the response of governments and global central banks to the crisis. Thus far, over the past few months, we have seen both the governments and the central banks basically staying on hold in terms of approval of new packages to support the economies, but it could not be ruled out that by December some aid, some new support, fiscal support could come, particularly in the US, from the Fed. If that happens, that could be a major boost for all markets, including Russia and the ruble. And the third factor, which is linked to the previous two, is the dynamic of oil prices. Thus far, oil prices were largely staying in the corridor of $40 to $45 per barrel for Brent, but at the end of fourth quarter and in early next year, we enter the period of seasonally low demand for oil products. This coupled together with the economic situation with the pandemic could actually lead to more pressure on the oil prices, which is obviously a negative factor if that happens for Russia and the ruble. Looking into the coming week, basically, I expect the ruble to trade in the band of 76.5 to 78 rubles to the dollar. Potentially, if there are more negative news coming on the COVID side or on the economic side, the ruble can actually come closer to 79 rubles to the dollar mark. However, in December, pending the support for the economies, particularly in developed countries, ruble still has a chance to strengthen, perhaps not to the 70 or so rubles to the dollar that I expected, but perhaps closer to 72 to 74 rubles to the dollar. If such support is not coming, then the ruble is likely to continue trading in the 77 to 80 rubles to the dollar band, the one that we have seen actually over the past month or so. On the Russia side, perhaps a couple of news needs to be mentioned. One is the dynamic of economy. Last week, Росстат has published the first estimate of GDP growth in the third quarter. It came at 3.6% year on year, significantly better than 8% fall we have seen in the second quarter, but largely expected. However, looking into the fourth quarter, given the pandemic situation, I expect actually the fall in GDP to be bigger than we have seen in the third quarter, around 5% down year on year. Overall, for the year, I retain my forecast at minus 3.8% year on year in 2020. And another piece of news is the inflation dynamic. The weekly inflation data published by Росстат last week have shown that the annualized inflation has come above the central bank target for inflation, first time in 13 months. Currently, inflation is running slightly above 4.1% year on year, and the target of central bank is 4%. And to remind, the central bank key rate is 4.25 right now. Potentially, the inflation could be higher than the current rate already in the first quarter, but that would be a relatively short period, say February, March, because from April onwards, I expect actual inflation to come down in annual terms due to to change in the base factor. But all that, in my view, means that the central bank is likely to continue staying on hold in terms of new rate moves, definitely in December, and with a large level of possibility in the first half next year. I expect actually the current official rate of 4.25 to remain unchanged up until at least mid next year. That's all on my side. Thank you.